As promised, we are now joined by Mike Simonsen from Altos Research here to talk a little bit about the state of the housing market. Mike, thank you again for joining us, or rather, thank you for joining us again. How are you?
Great. I'm terrific, Chuck. Thanks for having me.
Let's talk a little bit about the single-family housing market. What are we seeing now in terms of inventories, and how is that impacting transaction volume and pricing?
Well, inventory is climbing. So available inventory of unsold homes on the market is definitely climbing. It's climbing, basically been climbing all year. There's about 33% more homes on the market now across the country than last year at this time. So a pretty significant uptick. A lot of that is in the South. So Florida and Texas in particular have more inventory than last year. Like almost, I think Florida has like 60% more homes on the market now than a year ago. Um, and that, what's happening is so more homes are on the market. The number of home sales is climbing slightly over last year when it was really restricted. Last year was, there were buyer demand was way down, but supply was way down too. So it was really hard to buy. And this year the supply is easing, and so it is slightly easier, even though mortgage rates are up and it's a little more expensive.
When we talk about mortgage rates, we've clearly seen an upward move there. I think we were around 6.6 on the national average at the start of the year. Now we're kicking in the 7.3 range. How sensitive do you think buyers are to shifts? And what I mean specifically, I guess what I'm asking is, let's say that we see rates come back down into the sixes. Does that just unleash a wave of buyers who now can afford homes at these prices?
Well, yes. So I think one way to think about it is consumers are very sensitive to changes in rates. So if I'm shopping for a home and now it's, mortgage rates are at 7.3 and suddenly they're at 6.8, I save a lot of my monthly payment and I'm much more likely to jump at the next deal. So I don't, so 6.8, like I think we'll absolutely see an acceleration of both purchases. We may, if rates fall in the say like second half of the year, maybe down to 6.5, I think we would maybe even see inventory start contracting again compared to last year. So I think they are. I think consumers are sensitive, and there's a lot of people who would like to buy and are waiting on the sidelines for some relief in that case.
When people hear about rising housing inventories, I think a lot of times they kind of go back and say, gee, that's what I heard, a lot back in 2006, 2007, right before things got ugly. There are probably reasons why that's not an apt comparison to today. Is that correct?
Yeah, that's right. The biggest difference in that time is that in 2006, there were a lot of adjustable rate mortgages. There were a lot of people with mortgage rates in the sixes and sevens. And now almost every homeowner in the country has a mortgage rate under 4, under 4.5, some in the threes, some in the twos. And so if, for example, the economy turns and there's a big job loss recession, the folks that have that mortgage, the really cheap mortgage, realize they have the best deal of their lifetimes, and they're going to fight like heck to keep it. In 2008, they realized they had the worst deal, and they had to walk away. And so it's a big difference in terms of rising inventory. Will rising inventory lead to, for example, a giant home price crash? We don't see any signal in the data of a giant home price crash. We can see price, weakness in some of the areas, like for example, Southwest Florida. You could see prices adjustment, but not like a national 2008 crash. There's just no signal anywhere in the data for that.
Mike, I'm curious, when you mentioned Florida, one of the things that pops out to me is there's all this data suggesting that Florida just saw a huge influx in population in 2021 and 2022, and a number of Northeast states where a lot of our listeners saw meaningful outflows. Is there anything that you can suggest or anything that you can infer in the data where, hey, because there's so many properties being listed, that Florida may be starting to experience a shift away from that net inward migration, or is that not something that you can tell from this?
I don't know that Florida's migration may have slowed from from the peak of the pandemic, but
Mm,
I haven't seen anything that says Florida's net out migration. I do think that, a lot of the weakness, for example, in Fort Myers or Tampa, um, is from it, we have things like dramatically rising insurance costs.
sure.
And so if you've bought a second home
Mm,
in Naples that you use occasionally, and your insurance went from $1,000 or $500 a month to $1,500 a month, which somebody recently told me theirs did, that and you don't use that house that often, you can understand why that person may say, "Well, time to sell this one." And so you can imagine that there's that dynamic happening, even if Florida doesn't have an out migration of people. There are folks who finally suddenly find it more expensive to hold on to.
Two questions for you, Mike. Opposite sides of the story. First, what's the biggest potential upside for housing over the rest of the year? Second, what's the biggest potential risk over the rest of the year?
Well, we already talked about mortgage rates, and so upside meaning number of transactions and also pushing prices higher is if mortgage rates fall into the sixes, the mid sixes, I think will spur some demand. So, and if they fell quickly, like peak summer here, you could imagine that inventory starts shrinking, definitely compared to last year, and that competition, that buyer competition that's waiting on the sidelines, would push prices higher.
Mm,
Uh, on the downside, there is, the opposite risk. We've been sitting here for now a year and a half saying, okay, rates are going to fall again sometime soon, and they keep not falling, and the economy has been really hot, and so because those signals keep coming in higher, those have pushed mortgage rates higher. So I like to say, I've been wrong on interest rates for 40 years, 30 years. I don't know where interest rates are going to be, but if they go higher, consumers are very sensitive and they're not afraid to keep waiting.
very good. Mike, appreciate you joining us today. Thank you so much for the time, and look forward to catching up soon.